What if I tell you that there is no crash coming? Would you believe me? Maybe not, right? Because I have been telling you on this channel that the economy is so fragile, the financial system is so built upon the house of cards that it may collapse one day, okay? Which is still true, okay? But the fundamentals behind this kind of a euphoria, which we are seeing in the financial markets, it is changing day by day. And I've been reading a lot, not only with regards to the Canadian specifics and also from the US standpoint, but also from the global macro picture standpoint as well, because I have been looking at China, I have been looking into European markets, Asian markets, and now in the North American markets, and trying to connect the dots to understand, okay, what's happening in this whole financial system, because the whole financial system is intertwined like this. The banking system is intertwined like this, okay? So you cannot expect an event to happen in isolation of the entire financial system. Before we move on, if you like this video and have been enjoying my content, please subscribe to this channel, because that is going to help me tremendously in terms of picked up by the algorithm and get more views and subscribers. So please do so, and let's get back to the video. Okay, so what I've been noticing so far, that a lot of central banks are now on the path of easing the monetary policy. Okay, we have seen China has been adding a lot of liquidity in the market by reducing the rates and increasing the bond buying process by PBOC. We are seeing Japan, Bank of Japan is also doing the same thing. You know, they try to raise the rates just a little bit, like 0.25%, and when the market was collapsing because of the young carry trade, they bring it back down. We are also seeing easing policy in the European region by ECB. Bank of Canada has been cutting rates, and there is a potential to have a jumbo rate cut in the next meeting. Federal Reserve already cut 50 basis point, and they may be able to cut another 25 or 50 basis point in this year as well. So across the board, the major central banks have been cutting rates and easing the monetary policy. And if we have to look into what is driving these markets right now, like look at the financial markets, they are all-time high. US S&P 500, NASDAQ, Bitcoin, right? Every asset market is all-time high. Why? Because liquidity is being injected into the market. And when I say liquidity, I'm not talking about the US only liquidity, I'm talking about the global liquidity. So let's take a look at this chart. You can see that this is the chart showing the global money supply, okay? That consists of the four major central banks: European Central Bank, Bank of Japan, PBOC, and Federal Reserve. So across these major four central banks, we can see the global money supply has been on the rise, and it is right now at all-time high, almost touching $90 trillion. So there was a dip, in 2022, September. Then there was a dip in October 2023. But since then, it has been on the rise, and now it is still on the rise towards an upward direction. Look at the US. You can see there was a slight dip in April 2023, stayed until like October. Then it has been on the rise, and it is going up since then. So now you see that all these central banks are easing the monetary policy, reducing rates. That means creating money supply. So when you see the money supply is being going up, what does it mean? It means the new currency units are being entered into the financial markets. And these currency units are not coming out of any productivity. They are being created out of the debasement. So the existing currency units are losing their purchasing power, and then these major banks, they are actually creating new money supply by stealing the purchasing power from the existing currency units. So think about that. If you have, let's say, $100,000 sitting in your checking account or savings account, for example, that $100,000 is losing its purchasing power every single day. Okay, at least since October 2023, as per the money supply chart. Okay, so these banks, these central banks, they are liquidating this existing money supply by stealing purchasing power from you and I, the people who hold these currencies in our bank account. So what does it tell you? It tells you two things. Number one, unless we see a decline in the global money supply, we're not seeing asset prices going anywhere but upwards. That includes equities, cryptocurrencies, and real estate, as well as gold and silver. Okay, so that's the number one thing that we have to keep in mind, that the global money supply is on the rise. It's all-time high, $90 trillion. Unless it comes back down significantly, we're not seeing these asset prices are coming back down anytime. Okay, while we're seeing the money supply is increasing, that means our existing currency units are losing its purchasing power. So if you have not invested your cash into any of these assets, you are losing your purchasing power. Okay, you are at the loss. That is keeping you behind. So don't keep your cash just sitting in your cash account or checking account or savings account. You must invest this money into something that should keep up with this debasement. Okay, that debasement is going to happen no matter what. Okay, these banks will continue printing money because there's a lot of debt in the system, and that debt cannot be paid back. Okay, we don't have enough wealth available in this world to pay off that global debt of $300+ trillion. Okay, so that means they will continue printing money and they will continue paying the debt at a much cheaper dollar value. Okay, so that's going to happen in the long run. So you must ensure that your cash is being converted into some sort of an asset. I don't care, it could be Bitcoin, it could be gold, it could be equities, it could be real estate. That needs to be invested. Otherwise, the cash that you have in the system is continuously going to lose its purchasing power. Anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a subscribe and thumbs up, and I'll see you in my next week video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.